Good afternoon, everyone. So this is Royce Aguilar of First Metro Securities. I'm under the research department, and we're here again in our monthly Philippine stock market recap. So end of November, 11 months down, one more to go. So let's discuss what happened in the month of November. Okay, so same process as we've always been. So first we will discuss what happened in November, then we will discuss what to watch out for in the last month of the year, and then our stock picks. So fun fact that we have one new stock picks. So watch out and stay tuned. Okay, so let's summarize what happened in the month of November. So as of end of this month, the PSCI went down by 198 points. So we were down by as much as nearly 4%, but we ended today down by 3%. So we're now back at the 7,7 level. Specifically, we're now at 7,738.96. So year to date, we're still up by 272 points or 3.7%. So what dragged the market? So two reasons. First one, the uncertainty in US-China trade talks. So we've been going through this for a couple of years now, but what happened specifically this month was early this month, we had some progress. We heard some progress when they delayed the tariffs that was supposed to be implemented last November. But at the latter part of the month, which actually happened just this week, is when Trump signed the Hong Kong Democracy Bill. That angered the Chinese side because, of course, they don't want any other countries um, be involved in the said Hong Kong issue. So that may dampen actually the US-China trade talks moving forward. And then lastly, this was the big one, to be honest. This happened for the last couple of weeks. So we saw the MSCI rebalancing. So we got a weight decrease of 0.066%. That may be small, but recall that lots of global investors have MSCI index, and we were down weighted, although little just a small weight, but it was implemented by lots of global investors, not just local global investors. So that had an impact, and we saw a heavy net foreign selling this month. So what did support the market? We could have been down back to 7.5 by the end of this month, but what supported the market was the better than expected GDP growth. We saw GDP came at 6.2%. That was way better than expected. Expectations was only around 6%. We saw some muted inflation, only around 0.8%. And then net foreign buying from index heavyweight. It is noteworthy that despite most index stocks are are in a downtrend, SM and SMPH are near its 52-week high. And we saw some heavy net foreign buying for SM and SMPH just this month alone. So for SM, it's approximately 2 billion pesos net foreign buying, while SMPH around 400 million. Although it's just 400 million, when you compare it to other index stocks, that's one of the higher ones. So this is the chart. So we've been trading around this range for so long. You can see a couple of overshoots, one at around 8.4. That's the first one. And then the second one was around 8.2, but it supported the 8,000 resistance level. So what we recommend if you're trading this market is to continue trading it. Trade conservatively. We have support levels at around 7.8, 7.7. But if you take a look at the bigger range or the range for the year, it's around 7.5 to 7.8. So when you continue to trade that, unless there's a breakout above 8,000, something convincing, continue to trade the market. Time time to aggressively accumulate is should the market break and stay above 8,000. So the definition of actually staying above 8,000 is at least for a couple of weeks or nearly a month, it has to be sustained, or else we will just see what happened the couple of times we reach 8,000, above 8,000. So what do we watch out for in the last month of the year? So same data as before. So, but in terms of US-China trade developments, the question here is, will the tariffs be implemented on December 15? Something to watch out for. Something that is the headline that really we should be looking in the news, scouring in our daily reports, because should that be implemented, we might see global markets correct and us as well. Next is the PMI numbers. Again, the manufacturing numbers are all the more important, especially given the extended trade issues. So especially from US, China, and Philippines. So something to take note. We also have an inflation number coming out next week. So although this is not that much of a big factor anymore, we want to see overall prices be stable, not significantly going up, not significantly going down. So Bloomberg estimate is around 1.2%. BSP estimate is 0.9 to 1.7%. So people might be wondering if the couple of months back inflation was below 1% and now expectations 1.2. Question is inflation going back up? Not necessarily. Again, when you take a look at the inflation number from September and October, it was below 1% because of base effects. Base effects meaning it came at the inflation last year was so high, inflation growth this year was so muted. And what we want to see is the month-on-month inflation. That's what we've been telling clients. If month-on-month inflation picks up significantly, that's a concern. So you can see the month-on-month inflation in our report. There's also a Fed interest rate decision on December 11. So this might not be as market moving because the Fed is expected not to cut interest rates on December. But again, what we also tell clients is if it is regarding the Fed, we want to um, always watch what they say. Moving forward, again, the market is forward looking. So what the Fed says moving forward may affect the market. So there. BSP interest rate decision, December 12th. So initially, we thought that the BSP won't cut interest rates anymore. But recently, Jokno said he is open to cutting at least one more time should data reflect. So something to watch out for on December 12th. So stock picks. Okay, so we'll mention. So all right. So our first stock pick is Robinson's Land. So target price for that is at 30 pesos. It is noteworthy when you take a look at other property names, Ayala Land, Finvest Land, DMSS Lao, all those stocks significantly corrected. But when you take a look at Robinson's Land, its uptrend is intact. Its earnings are doing well. So why? The question is why. We know that the property sector has been dampened by the sentiment regarding the uncertainty in the POGO sector. So what is unique about Robinson's Land is 2 point only around 2% of its office portfolio accounts for the Philippine offshore gaming operators compared to its other peers that are has significant or double digit exposure, the likes of Philinvestland, Diamasaslaw, Mega World, at least double digit contribution. So Robinson's Land is technically a growth stock and a safe haven. So that's why we like the stock. So besides that, we like the stock because of its new business in China. So it is already contributing in third quarter numbers as we've told clients. So something to watch out moving forward. So recall in a certain downtrend, if the index is only trading in a range, we want to look at stocks that are outperforming because they are the ones who will be leading the next rally. So Robinson's Land is one stock to watch out for. So next. So Megawide, this is the stock that we've been really monitoring. The target price, I apologize. So the target price for Megawide is now at 23 pesos. We lowered our target price to make it more aligned to the recent earnings, which is not that good. But what we've told clients is this is a 20 2020 play. Um, so there. So for Megawide, um, we like the stock because of its exposure, because of its competitive advantage. And we like Megawide because it is both a construction engineering company, meaning moving forward, should they bid for projects, they have the capacity or they have the ability to bid lower. And also, they're already operating the Mactan Cebu International Airport. So that is the half of Megawide's earnings. So we hope that will continue because that actually, especially the tourism here in the country, that will further benefit Megawide in the long term. So here we edited it for you. So target price is at 23 pesos. So next is Pure Gold. So this is the consumer stock that has been beaten down lately, despite good earnings from its subsidiary or its other company, SNR. Pure Gold has been sold down, and we think that is an opportunity for those who hasn't have Pure Gold yet. So let's go first the SNR. So we like SNR mainly because it has an aggressive expansion plan, and its only competitor here, Landers, is not that aggressive in expanding. So that will further benefit SNR, especially their target expansion is around outside Metro Manila. So as for the pre-gold business, that we know that the lower inflation rate is mainly driven by the lower price of rice. So moving forward, we think that will benefit Pure Gold because that will induce traffic growth, that will induce more customers to go to the Pure Gold store, not only to buy rice, but to buy the other necessities inside the household. Recall that Pure Gold's target market is the low to mid income household, meaning they are more sensitive to inflation. And since we have lower inflation, that will benefit Pure Gold's target market. So target price for Pure Gold is at 54 pesos. So we have our new stock pick is Axulum Resources. So for those who doesn't know, our target price for Axulum is 6.03. So that's quite high. That's 80% upside. That means this is for long-term investors, meaning the value of Axulum Resources Corp move within the next 12 months is 6.03 pesos. And earlier it closed at 3.35. So that gives you 80% upside. So why? Why do we like Axulum? And we think we like Axulum because we believe that earnings growth is poised to be at around 23.9% if you average it over the 3 years, specifically for full year 2018 until 2021. So what we like about Axulum is we know that there's volume growth potential among its existing products, its new products, and there's expansion actually in the margin. So I would like to stress the second reason. So we do expect Axion's full year earnings to be well within the distance of our forecast of 800 million. Recall that the 9 months earnings of Axiom is around 600 million. So top line performance will continue to be lackluster, but the returns, the bottom line, which is more important, will continue to grow like what it did in the 9 months of this year. So if you take a look at the revenue, it's lower this year. But when you take a look at the net income, which is more important to investors, should be more important to us, it's higher. So it's a fun fact that the lower global prices of coconut oil is actually beneficial for Axilum. Again, that was apparent in the last 9 months of 2019. So 6.03, that's a target price. Question: will it reach 6.03 within the next 12 months? It is likely, but it is possible it may not reach. But the value of Axiom Resources Corp within the next 12 months is 6.03. So something that we have to clarify. So there. So PNB, this the stock that has been beaten down as well lately. Good opportunity to pick up once it rebounds. For long-term investors, good to pick up as of the moment. So we like PNB because of its plans to ramp up its retail and mid-market loan book. That is beneficial for any bank because retail and mid-market loans are actually higher margin compared to lending to corporates. PNB wants to be one of the biggest banks again, as it was before. And it wants to do that via earning higher, via ramping up its retail and mid-market loans. So it has the capacity, it has the ammunition because it successfully raised 12 billion last July 2019. So target price is at 56 pesos. So pretty significant upside. You have 49% for this. Again, same with Axiom. It may or may not reach 56 within the next 12 months, but we think that's the value of the company. Next is Metrobank. Metrobank is covered by DBS, Vickers Securities. That's our research partner in Singapore. They cover the stock because Metrobank is our parent company. So to remove bias, they are the ones who are covering it. And it is their stock pick this year. Their target price is at 83 pesos. So 83 pesos is already the target price even post-stock dividends. So DBS likes Metrobank because besides being it the cheapest, it is poised, its core lending business is poised to improve in the second half as seen in the third quarter and also the fourth quarter as well. So that momentum should carry out in the next year given the improved business environment. So there. Cebu Pacific. Cebu Pacific is also the stock pick of our research partner. Of course, Cebu Pacific is not affiliated with us in terms of ownership, but they cover it because it is they cover it because it has been part of their peer table. So that's better for them. So in terms of Cebu Pacific, it is still cheaper compared to its peers. Even at its current price, even if as it rallied, Cebu Pacific is still poised to outperform the market in terms of earnings and hopefully share price as well. So we've seen earnings improve in the first 9 months. We've seen earnings actually booked a net loss in the third quarter, which is actually normal, which is actually a seasonal low for Cebu Pacific. But fourth quarter is always is always a good quarter for them. So let's not be stick with the headlines. We stick with the underlying numbers, and under underlying numbers is Cebu Pacific is trading still cheap despite it actually outperforming lots of stocks this year. So it was mostly because of their expansion in terms of expansion, meaning they're buying more fleets, which has reduction in fuel burn, meaning less cost in the jet fuel or less effect when volatile oil prices. And it has higher capacity. So that's good for Cebu Pacific. So target price of DBS is 122. So again, for those are our long-term stocks. Those are the calls that are valid for the next 12 months. As for those who would like to earn from this market in the shorter term, we have the Traders Playbook. So the Traders Playbook is cut down to four segments, five segments. So we have what happened, what's the news, what is it all about, and then we have our view, what we think, and we have a recommendation. So in terms of our recommendation, we always provide when you what price do you enter, what price do you exit, and we provide that cut loss point just in case the call does not go our way. And the second page, you will see the technicals, and then you will see the peer tables or the numbers compared to its peers. So there, thank you. And we would like to answer now your questions this Friday afternoon. Okay, so first question is many PSI stocks are oversold or near oversold. So it's very tempting to buy. Should we wait for the PSI reversal? So depends on your horizon. So what we've mentioned earlier, we recommend buying at or near 7.5 and selling at or near 8,000. So right now we're at the 7.7, so that's more near to the 7.5 compared to its 8,000. So we recommend buying select stocks that are cheap. Of course, we do recommend you prioritize our stock picks given it's most of them already cheap already. Most of them already cheap. But there are certain opportunities now for other stocks that are oversold. So, but again, you buy oversold stocks that are good in terms of underlying fundamentals. So you don't only buy stocks that are cheap because they might be cheap for a reason. So you will see cheap stocks that have good underlying fundamentals. You will see that in our reports, in our traders playbook and the like. So there. You can, so to answer your question, you can already buy several stocks. Okay. So next question is there any upcoming MSCI rebalancing in the coming months? So there's always MSCI rebalancing every year, but what is special about the MSCI rebalancing this year was there was an inclusion of China stocks. It is a significant MSCI rebalancing this year. So in terms of to answer your question, there's always an MSCI rebalancing for it's thrice a year. But no, it's four times a year. It's every Feb, May, August, and November. But the gravity of the MSCI rebalancing will not be as big as what it was this year. So there. Next question is, do you see P Core and SEC recover next year? That's a that's a tough question. In terms of Semirara Corp, it seemed like it was poised to recover, especially the strong third quarter. But given the recent developments about the suspension of its coal mining operation that puts to risk any recovery this year and next year. As for Petron Corp, its price is significantly lower. But in terms of recovery, we have yet to see their fourth. I want to see their fourth quarter numbers because as of this moment, there's still lots of risk in terms of oil prices, given the uncertainty in the economic environment, global economic environment. Oil prices are poised to maintain the low prices, so that's going to hurt the margins of Petron. So in terms of those stocks, it's still a wait and see, but not yet long-term buy. Of course, you can trade it as much as you want. Okay, so next question. So can you include the stocks being rebalanced in your reports? Oh, we do mention the significant inclusions and exclusions in our reports. If you take a look at our daily reports, we do mention there the stocks that have been removed or excluded. So there. Next question is, what are the sector being the best in momentum based on your research in the coming years? So in terms of something that we're looking at, um, in terms of the property space, it looks like we only have select stock picks for that for next year. But we're looking at the consumer sector. We are still analyzing the stocks, but we are taking a look at the consumer sector as a rebound play for next year. Um, so in terms of banks, only select banks as well. So in terms of sector that will outperform, we're looking at the consumer sector, but in terms of the stocks, we are still analyzing in terms of which of those will outperform. So we will tell you that hopefully early next year, hopefully by January to be specific. So next question is, do you think DMC will go up in the short term? It's being oversold. Well, I do think DMC will go up in the short term. That's a good question, but I think long term it's still risky to hold DMC. We would just like to clarify that DMC looks like a short term rebound, but in terms of long term, you have to look at other stocks instead, given the risk in the business. Next question is thoughts on the debut of Frutas Holding. So very, very interesting day. Went up as high as 45%. It ended at its low at 1.71. My thoughts is I'm surprised as anyone is, but if you take a look at the daily chart, if you take a look at the daily chart, the 1 minute chart to be specific, um, let's take a look at the chart. Let's wait. Okay, so when you take a look at the chart of fruit, it seems like when it peaked at 245, when it probably investors or traders are thinking it looks like it's not going to hit a ceiling, they already took their profits. So that's the tendency, and of course, it is noteworthy that lots of people are investing, trading frutas, and used conditional orders. So what happened was when it triggered their conditional orders, nagtuloy-tuloy yung sell down. But again, what we tell our clients is frutas, what we think is a long-term buy. It is unfortunate it didn't hit ceiling, but we're still happy that that frutas was listed. We think it's gonna be a good company to invest in the long term. So there. Okay, so next question is Axilum IPO proceeds went to debt repayment, at least some. What strategy do their management have in place to grow the business? So if you take a look at the proceeds of Axilum, most of it is to expand their current manufacturing facilities and the like. So they plan to expand to other countries in terms of distribution. The pipeline is in Europe. So that's where it is poised to grow outside of the Philippines. But they also plan to expand here in the Philippines. But of course, the priorities where the higher margins are. So as of the moment, poised to expand in the other countries. But again, it's mostly expansion, not necessarily debt repayment. But yes, part of it is debt repayment, but most is for expansion. Next is MPI recommended to buy now? I mean, in terms of MPI, a good, it's been a cheap, it's been a value stock for so long. Um, we do appreciate the investors holding onto the stock in terms of their patience because it has been going around this price for so long. MPI is a good business in terms of earnings. Earnings are poised to grow moving forward because they sold the hospital business. Because the problem with MPI is while earnings continue to grow, it's only at single digit because they have high interest expense. Given that they sold hospital, we are awaiting the next earnings results on how the recent hospital business has sold and its impact in its earnings. So that's the thing we have to watch out for. So if you are an MPI investor, it's good to at least buy some and take a look at the next earnings and we'll see the impact. So there. Next, okay, so MPI was already answered. So what do you think of MegaWorld? So MegaWorld is a stock that is continue to be posting double-digit growth in terms of share price. It has been slowed down because of the uncertainty in the Pogo sector. So if you're already holding MegaWorld, um, the good strategy is to not accumulate now yet, but wait for it to rebound, wait for more certainty in the Pogo sector, better news for the Pogo sector, and then you could buy. So that's the strategy I'm looking at now. But as of this current price, it's still in a straight downtrend. So if you're an investor, you really have to be patient for this. So next question is a global recession coming? So again, a global recession, it in terms of global recession, it made sense more at the previous months that it might be coming, but as of the moment, it seems like better data is coming at least for the US in terms of the Philippines, we are poised to rebound next year in terms of global data unless one country messes up and we get affected. So that has happened in the previous crises. So but status quo unless the trade war really worsens, unless some country lumaki yung debt tapos nadamay tayo and like we are good to go for next year. So there. So, which is a better pick, DMC or Robinson's Land? Robinson's Land, definitely. As mentioned earlier, it's a long-term pick. It is a stock that has limited risk in the property sector, and it's poised to grow given its business in China is already contributing to their bottom line. Okay, so last question. What are your thoughts on East West? So, East West is a good stock in terms of earnings. It only has a risk because of in terms of their loan, the teacher salary loans. But in terms of its value, it is um, it's one of the cheaper stocks in the banking sector. What happened lang kasi is, nag-breakout siya. It did break out early this month, but it failed to sustain the breakout. But if you're a long-term investor, it's good to pick pick the dips, buy the dips. So there. So actually, just like to answer one last question on the outlook on the conglomerate sector. Okay, so conglomerate sector this year did not do so well in terms of earnings. In terms of to be specific, the viewers preferred stock, or at least what is on his radar, are AC and GT cap. So we just like to specify those. For AC, the thing with Ayala Corp is we have to know the actual earnings of Ayala Corp. So in terms of Ayala Corp's earnings, of course they booked a significant gain from their AC energy. But when you exclude the gain from sales, earnings this year was actually not that rosy. So moving forward, we would like to see Ayala Land perform better. We would like to see IMI. We would like to see um, Manila Manila Water recover. But in terms of its current price, as of the moment, it looks really cheap. Ayala Corp. If you're a long-term investor, it's good to pick up. If you're a short-term investor looking to trade Ayala Corp, its current price is still messy. It's still trying to find support. So that's for Ayala Corp. But if you're long-term, um, buy the dips but be very careful in its next earnings. We are hoping it would be better than what is the earnings this year. As for GT Cap, of course, I just like to clear na we are part of the Metro Bank Group. GT Cap partly owns Metro Bank. So, but as for GT Cap, it is noteworthy that earnings for GT Cap are already improving given the better performance of its Toyota or its automobile business. Metro Bank performed really well given the trading gains and the like. So, there. Okay, so I'm feeling sige, last pa. Okay. So I'm feeling really generous na. So last, any stock picks for Santa Rally? So besides our stock picks, pick up the ones that are oversold right now. DMC looks oversold, but I would like to rate it's tradable. BPI is oversold. We have a hold call on BPI, but given the recent sell down, ang taas na ng upside, no? We have a target price of 102 for BPI. So something you could pick up. So there. So I hope you have a Merry December, Merry Christmas, and let's hope we do have a Santa Claus rally this year. But we will update you on what we think in the market, via our daily, weekly reports, Traders Playbook. Please stay tuned for those kinds of reports because it will really help you in terms of what we think will happen in the market. So there, and happy end of November, happy Salary Friday. So enjoy.